Hello.
There.
Adam, how are you? Welcome back.
Okay, good. I'm doing
Good
great.
to have you. So, King Dollar, King Dollar, King Dollar. Anything you want to
I mean, that's a
share on
strong
your
claims
screen?
number after yesterday's ISM number. I think we're rolling here pretty well, really pushing back against the recession narrative or the slowdown narrative in the US.
Well, I want to acknowledge that last time you were with us, your bearish euro, several hundred pips above here, where we had just come off the 112 high. So,
Yeah, I mean, that did it
nice,
ever get
nice
swallowed
call.
up on that pop last week too, or at this over the up to 109 and just
Yeah,
erased.
you have longer term targets. I'm looking for the potential of this 102 level. I think longer term. I'm not saying we can't have a bounce, but that's around 61.8 back down here. But look,
I think
go ahead.
I think the numbers, this is going to be what we're going to see over and over again is soft Europe numbers. I mean, it turns into a bit of a weather trade in the winter. Germany, I think it was important last week, the economy minister came out and said that they couldn't get a deal on subsidizing energy. And, earlier he was calling it existential for large industry in Germany.
Yeah.
And they said, you know what, tough luck, because it was tough with some smaller businesses and medium-sized businesses and big manufacturers to kind of make it happen. Plus the deficit concerns there, and they gave up. And there's some bit of a corporate tax break, that kind of thing. But China's coming for their cars. Russia's already come for their energy, and maybe the rest of Europe does okay. Italy's been doing better than really anyone thought, but there isn't much to like.
What do you think of this statement that even when we do eventually get to a pivot and rates begin to fall, that the dollar doesn't lose its advantage because rates will drop faster in Europe than here in the US?
And I think that's the case in a lot of places. US was one of the first to hike, and it may be the very last to cut because it's just not biting that hard. And the relief valve in that case would be the dollar, right? And you start to get, Goldman Sachs has been talking about it, and I've been a dollar bull for a long time, is that what's really to stop the dollar? Maybe the Bank of Japan takes a swing at it. You have China intervening as well, but the fundamentals are clearly a dollar driver. And where rates are pushing up again, I don't know if I believe in this rate move and yields pushing higher, but it is what it is. And if it pushes even higher, then you kind of just have all these elements for a dollar move that who's to say where it stops. And these things tend to go way farther and way further than anyone thought possible. I was trying to put my video on there, Dale. I'm not sure if that works, but
you can.
Said the host has prevented it, but that's all right. Nobody wants to see me anymore.
Oh, I don't know how that happened. Usually it's wide open. But anyway, we'll be on the radio today.
Well,
so
that's fine.
So why don't we talk a little bit about one of your favorite markets, and maybe we could tie into your seasonal work as well. Risk looks pretty negative here. And did you ever think you'd see China, pull a move like not using Apple phones by government?
Well, that's big, right? I mean, that's 60 million phones, and that might be the tip of the iceberg. I think that's probably a bit of a warning to the US.
Stop poking us in the eye with the arms packages to Taiwan that we reserve for sovereign states. You mean foreign policy like that?
Exactly. And there's obviously
why don't we send some uranium depleted shells to Ukraine? They only have a little radioactive dust on them. But
there's a schism, right? It's like a total tech schism.
Does the US want World War III to start here or what?
Okay, a lot of questions there. So the bearish seasonals, it's I think it's pretty well known now. August, September, for stocks, and it's sort of unfolding now, and it's getting a bit of a kick from data. Just needed a reason. You guys earlier were mentioning the head and shoulders in the S&P 500. I mean, it's pretty well defined there, and you know, that there's a little bit of work to do to get to the neckline, but you have to zoom out there to see it. But
Yeah. Oh,
it's
I know what you're talking about, but
it, and then, you know, in terms of, yeah, things like Apple, I mean, it's
yeah,
slowing, you know, Tesla, you know, it's up 100% this year. Profits are down 20%. And, you know, there's a lot baked in for next year in terms of how much money they're going to make, but rates are where they are. And the car market is in tough right now.
yeah.
I mean,
People are
maybe
turning in
Detroit has a,
keys. They're turning in keys on what they have right now
yeah, and
on their
the
car
used, I
loans.
mean, there's just a lot of uncertainty. I think that's the natural. I mean, we've seen the prices. I went kind of viral on Tesla prices falling, and that's kind of the deflationary impulse. When you see prices falling, you don't buy because you think, well,
Yeah,
I don't want to be the bag holder who buys a $120,000 car that's selling for $80,000 a year later or 8 months later. So, you
okay.
know, I don't think that could be very good for orders for them. So, you know, there's a couple companies or 7 companies really carrying the whole market. And again, yeah, you take
Yeah.
out Apple, Tesla, Nvidia, a lot of big questions
It's a
about
good
them in
thing they
orders.
rebalanced Apple. You think they knew?
Well, maybe
Um,
that helps a bit.
I mean, didn't the rebalancing happen? And that was high. So I want to ask you this, Adam, because this is what I'm hearing. So even when people are negative the market short term, I don't even ask them, well, is this, going to be a big wave or I don't, they come out to qualify, quote, it's happened a handful of times now. Yeah, the market could come down, but I'm not calling for a crash. The market, yes, it could come down. It's only a correction. It's healthy. Um, that, to me, being the contrarian tells me that there even people who are negative are complacent.
You can feel that complacency in the market, I think, right now. That's kind of
Yeah.
the coming out of summer thing. And I feel that is part of the seasonal thing is
Okay.
that, you know, you get that August kind of move. All right, it bounced off that. But there is just a whole bunch of complacency around. And even this bad news is good news narrative and good news is bad news. Like it's all very jumbled and whatever the rates market is doing. So it really feels like there's just not a good reason to be buying a lot of risk right now.
Yeah.
But you know, it seems like people want to buy bonds too, and then you get a week like we've had this week, and how can you buy
They
bonds in
did.
that either? So
Yeah, they did actually have a little update TLT yesterday with yields pushing up. We'll see and they're called, pretty much unchanged. So we'll see. We still haven't taken out the 90 level. That's the low made last October. So,
I mean, it's
you know,
pretty compelling. It's what I'm doing right now is getting long duration and
okay.
thinking about different ways that's going to work because rates aren't going to stay here forever. But
Yeah.
timing it is I mean, it's tricky right
So how
now.
do
I
you
mean,
do
you've got
it?
to take the data with what it is. I mean, inflation is coming down though, but you know, 229 jobless claims, ISM services 54. I mean, those are pretty good numbers. But you listen to and then Visa and MasterCard wrote in their most recent comments pretty optimistic about spending as well, not just in the US, but everywhere. So, and then, you know, you mentioned China and you know, everybody's digging in on China. And we've all been
Yeah.
digging in on China for, you know, 20 years. But you
Yeah.
just dig and dig and it's really hard to maintain any kind of conviction on China
Yeah.
because you just don't know. I mean, it's obviously slowed down. The real estate is busted, but you know, if it's a 30% correction on real estate after a 200% rally, I mean, how many people are really underwater?
How is it in Canada with the adjustable
You know
rates?
what? I feel like there's another leg just happening here now to the downside. I think you know, Canada's mortgage market works on this 5-year
Yeah.
cycle where you get resets, and people are getting, you know, their monthly mortgage payments going up, say $2,000, which is
Yeah.
just wiping out discretionary spending.
Right.
So, and that's the dollar bull case, right?
Yeah.
Is that the US, you don't have that. Whereas in Canada, Europe, Australia,
Right.
you do.
The rest of the
And
world, we're
it
more
really,
insulated. And yeah, that's really the rationale is that we're back to, clean and sturdy shirt.
It's the simplest. I
Yeah.
mean, the simplest trades are the best one, and that's it. And I think everybody would like to get the dollar cheaper, if they were buying it, but I don't know.
There
I
have been
mean,
no pullbacks, hardly any, the whole
yeah,
way.
well, even like last week, we
whole
showed
way.
that euro chart. I mean, you got 3 days of euro gains, and then just the bottom falls out. And even yesterday, you had not at the ECB pushing back, saying rate hike chance are higher than the market thinks for Europe. But I don't know if they say they do hike this month. I think the market sells that pretty quickly as well,
Yeah.
because ultimately
I-
it's going to come back to growth. So yeah, probably
okay.
back to parity and below. I mean, it looks like it's breaking down here now.
Yeah, look, it's getting ready to take out a 50-week moving average. Yeah,
I mean, that
right here.
German industrial orders number yesterday was terrible.
Yeah.
Uh,
So
and so,
Europe's in recession already. China, we know they have problems. So explain to me, I know it's a supply situation, but you're normally constructive on WTI, and that surprised me. I thought we were topping, here. Okay,
yeah,
we
China
caught
certainly
this.
made it seem pretty cautious here, but this is. I think if we turn around today and we're down 50 cents and we get inventory data, this will be 10 days in a row of gains. So
Yeah, look at that
massively
move.
overstretched. I mean, if you have like that dollar RSI, I'd be curious to see what that is if you switch to a 1 hour chart there or a daily chart
Yeah, we're
on
starting
oil.
to get a little divergence in the dollar up
But
here.
so for oil, I mean, it really is, I think, a supply story. We're around 2 million barrels a day out of a 100 million barrel a day market short on oil, and even small imbalances in the oil market can make for massive overshoots. And you don't have any US supply coming. If anything, US supply is going to disappoint, and there's nobody else that can pump. So barring a break in OPEC, it's really
Yeah,
up to Putin and MBS to decide how high they want oil before they start pumping more. And it's obviously not here because they
yeah,
just announced an extension. So you have to assume it's 100 Brent, maybe, and
yeah.
then
The
100
the
Brent for a
chart,
time.
yeah, the charts point towards 95 on WTI.
And do you get a demand response? You know, a lot of people watching China, but actually the numbers have held up really. Can you pull up a daily chart of that? Yeah, that's what I want to see.
Sure, buddy. There
Because
we
it's
go.
going to be like the RSI has got to be like, well, it's not insane, even
No,
after, but clearly overbought. And but I just think, yeah, okay, you get 84, that's where you buy. And
okay.
then and spreads are blowing out, like diesel and gasoline inventories are very tight as well everywhere.
And maybe Europe's not going to be as lucky on the energy side this winter, not have a mild winter. You have a vibe on nat gas. It's like this grinding bottom that the Widowmaker is trying to put on.
You
You
worry
think
a
it's
bit
worth
about
a
oil, like
shot?
the oil gas interaction, right? So you get up to
Yeah,
$100 oil again, you get more drilling, and then you get associated gas with it, right? So you drill a well, it has, say, 70% oil, 30% natural gas. Well, you don't need the natural gas, right? So you're adding to a market that's oversupplied. And I don't know if there's a lot of discipline on the gas side. Now, there is some LNG coming on. So that takes away some gas. The US is exporting a lot of gas to Mexico now. So that's kind of adding, and I think eventually there's going to be a convergence to maybe around $5, but that's in the back half of this decade. And
okay.
so, for now, there's, seasonally it's good natural gas at this point. And it usually is good right until you get about that first cold day in New York in maybe
Yeah,
October, November. And that's usually the time to get out of any kind of natural gas trades. And then after that, it's just all weather. And it's the El Nino, whatever it is this year, and that's
oh,
supposed to be good for weather.
Grande
Yeah,
El
so
Nino.
that's supposed to keep it warm. Maybe that's a bit priced in, but come on, it's trading weather. You got to be out of your mind.
Should I cover my shorts in platinum down here?
Well,
I'm
you know, the,
kidding, man. Look
we're
at that.
coming up to a nice time of year in precious metals. Call it end of November.
Okay, because gold's been holding like a champ with silver getting decimated.
And the
So
gold miner's pretty cheap, even with the price of gold.
the,
I don't know if that's pricing in inflation. I mean, energy is a big cost for
yeah,
miners, but
yeah,
the I central banks are buying. Eventually, the U.S. is going to turn, right? At some point in 2024, they'll get pretty dovish. And
There's
I just,
GDX.
you got to look like, no, the miners are way off the highs there.
Yeah, here's a weekly. Bigger picture. So we held this level, this GDX a few times. Under here, I think we could get to 76.
Yeah. I don't think there's a big rush. You want to be there by November, and if you get a good opportunity to get into gold before November.
Okay. So October, November, time wise is seasonally, that's a good time.
Yeah, middle of November, I'd say. Late, yeah.
Okay.
If there's opportunities before that, or something fundamental aligns, maybe we get a flush in stocks, takes gold down.
Yeah.
That's all looking kind of possible.
Yeah, doesn't it? A flush in stocks. Again, people are saying correction, it's healthy, but
I just think that
I
there's
guess
just there's a complacency about the moves, right? Even yesterday, 40 points yesterday, 30 in the futures now, getting a little bit ugly. And then suddenly you wake up and there's 100 points down. Yes, the SPOOs are, 1.5%, 2%. And then people wake up and say, wait a second, tech's had a huge run. Got to take some profits. Yield's still high. Fed's not coming to the rescue anytime soon. I think the real, okay, say you have like 70-80% of the time stocks are going up, right? In general, over the last 50 years.
Yeah.
When they're not going up, in most of those times, is when the market wants the Fed to cut, but it's not cutting. Right? The market doesn't mind really if the Fed's hiking. The market likes when the Fed's cutting. But when the Fed kind of should be cutting and isn't cutting, that's when the market really kicks and screams, or wants more QE or whatever. It should be easy.
I mean, when you look at this weekly, isn't it possible, the highs that we had here, that this whole thing was a failing rally, just a bear market rally after the top, and that we could have something like this from up here to take it to 3,000? Why is that such an extreme view?
Yeah, well, like I said,
why is that so extreme? People say I'm extreme.
In 20, as we look ahead, there is going to be this time when the Fed wants the market to cut. Everything's slowing down, inflation's slowing down, but the Fed is just going to say over and over, we want to make sure the job is done, right?
The Fed wants other central bankers might be the
S&Ps,
same. Maybe the Fed wants 3,000 S&Ps.
Well, they just want to make, and it's in the long view, it's a good, like if you crush inflation, I mean, then coming out of that, it looks so good, right? If we go back to the kind of new normal, the 2010s way of trading, it was just low inflation, low rates, party time. So crush inflation once and for all, take the medicine. If it means S&P 500 down to 3,500, maybe 3,000 seems extreme, but something could go wrong.
See, there again, another person calling me an extremist. All right, okay, look at this regional bank chart. You want to get long here?
Yeah, the commercial real estate is such an overhang. It really is. I mean, they all own it, and office real estate is just dead in the water. Yeah. And they're going to be bag holders. And if they have to raise money, they can't raise money. I think that's the thing. That's what that the KRE is pricing is. They cannot raise money if you're a bank, because you have to realize losses on your bonds in order to do that. And it's just a death spiral. So you're basically you're going into this war right now with commercial real estate with the ammunition you have. And nobody knows where the bodies are buried, right? You look at the whole world of office real estate, and then maybe other commercial real estate if we are going into a recession, like retail, and it's just too much pain coming.
Okay. So I know long term you talk about how long it takes to get a mine online, like the copper. It's showing really hasn't gone anywhere for a while.
Well, I'm worried because the whole thesis is really the green transition, huge spending. We need a ton of copper for all this stuff. Even just building out transmission properly needs so much copper. But
Right.
half of global copper demand is China.
Okay.
And built into every forecast for copper is decent growth coming out of China.
Okay.
And even if you have, say, 1 percentage point or 1.5 percentage points miss on Chinese growth for, say, the next 5 years against what is built in, then it tips back into surplus. So with what's happening in China right now, I'm mostly sidelining copper
Okay.
because it's just far too uncertain until we get some real stimulus or a real sign that things are picking up, or really just a real sign that the leadership in China cares about hitting the growth targets. And
You
I think
know,
they're sending the opposite message.
is it possible that the Fed's campaign and what they've done has done more damage to the global economy than to the US itself? And that if we continue, keeping rates up when they should come down, the more of the carnage is Europe, China. And, we're not immune, but it seems like the pain is being more distributed outside of the US for mainly a US policy.
Right. And I
Central
just
bank
think
policy.
it boomerangs back through the US dollar, right? If eventually you
Yeah.
get a really significant move higher in the dollar. And I think nobody's talking about a
No
big
one.
overshoot in the dollar.
No, you know
And
what? I'm so glad. I'm glad you brought that up, Adam. That's so great because even the dollar bulls like me, we're looking for 108. Basically saying, how can you be bullish a dollar after this decline? And that this is only going to be a correction. But there are guys like Brent Johnson, the milkshake theory, that says a dollar could just take out these highs.
well,
So
they don't, these long-term moves, they don't end with a whimper. They end with a huge overshoot. And I think that you have to think about that if the US keeps doing what it's doing. There's worry on the fiscal side, but I don't think that hurts the US dollar. And eventually the pain comes back through, say, something like manufacturing or exports
yeah,
or competition on that side, because the euro becomes so weak, everything
yeah,
else becomes so weak that you
right.
can't invest in the US. So, but that's
So
years
this is a
away.
wild card right here. Because
Well, I mean,
because
China and even China, so they have this policy option, like they're struggling with what to do right now. Do you go into debt and stimulate more? And that's one of their options. Or two, or do you let it go and just pick up the pieces? Or number three, do they really let their currency go? And remember, they're buying dollars, or they're selling dollars to keep their currency strong, right?
right.
So they're trying to keep or weakening it. What if they just let it go and say, you know what, we're going to export our way out of this economic weakness with we'll let it run to 8 or 9.
Yeah.
And then that's a big
That's
tailwind
a
for the US dollar.
deflationary, that's shifting their deflationary impulse to us by
Well,
doing that.
that's it. And in the manufacturing, and they're coming for cars. I think cars is such a big, they're cranking out cars in China and
Ever hear that
bikes.
song, Counting Cars?
I don't know that one.
Oh, all right. Anyway, okay. So you mean the EV market is a real big battleground?
Big,
Is that
big battleground. And they look like they've got some winners there. And, what did we see this week? I saw headlines, average new car price in the US, $66,000. I mean, if China is putting out $30,000 EV, maybe not the best range.
mm-hmm.
Maybe that doesn't land in the US, but maybe in wherever,
Europe?
most of the rest of the world, there's a big market there. And I just, maybe they take it, and especially they say they can take it with a much cheaper yuan, and they've got the batteries, right? So,
Yeah,
and
they've got the
that's
lithium. They have everything.
so that I just think China devaluation is probably at the top of my radar
Okay.
and then I'm watching the Bank of Japan as well. I don't you were talking about intervention in Japan before I came on.
Yeah.
I'm not that worried about 150. I think it's 155 is where they get really serious, especially if it's a dollar move, right? Like if the euro's down, falls down to 105 or 103.
Yeah.
I mean, it's not just dollar yen they're watching, right? It's the overall level
Right.
of the dollar. And that depending on what China does, I think the coast is still clear for dollar yen longs. But the one to watch is the Bank of Japan. If they say, okay, we have to start raising rates, I think that's really a bigger move than just plain intervention.
Okay.
But they're talking about stimulus in Japan now in October. So I'm having a hard time getting my head around what the inflation picture is actually in Japan and the growth picture, because it's been good this year. They've been a standout performer.
Yeah, the Nikkei it hasn't made new highs for a long time. I don't know if things are as weak there. I know the DAX has really been. Here you go. Here's the Nikkei. So we have a potential failing rally here.
Well, it's been. Nikkei. I mean, it's cheap. A lot of foreign stocks are cheap, but I just don't think there's any appetite.
DAX kind of led this top in the S&Ps, didn't it? Really ran out of juice. Didn't do anything in the summer.
I don't know if that's a week, but there were a lot of doji stars leading into yesterday, and then it was soft yesterday. It's kind of medium soft today.
DAX is running off the tracks.
Well, it doesn't look great.
Yeah.
And who would want to own it into winter? I just don't understand why you would want to own anything in Europe into winter. And maybe it's too early for that trade, but I mean, if you get 30 below in Germany, forget about it.
Yeah, they were fortunate last year. Yeah. Well, Adam, I really appreciate the clarity, especially, the risk of China just, letting the yuan go, because they have been trying to defend it.
See, I just should spell that out, since the risk of that is they don't want capital flight. I think that they worry that if they let the currency go, people take their money out of China, right? And then they want inbound investment, right? Because the US is cutting off investment there, so they want to keep money in the country. But they have ways to keep money in the country, right? It's a totalitarian society. You can't just take money out of China. It's against the law. Obviously, people find ways, but that is sort of the policy mix. And right now, I think they're trying to do little things and patch it up, but I think eventually they're going to have to make that decision.
Adam, so great to catch up with you every time we do it. So there's your neckline. Take a snapshot of DAX. You have the 200-day and a major support level down at 15,472. And Adam Button does great work, everyone, at Forex Live. One of the best news traders on the street, and he's a darn good writer. So, go to forexlive.com and check out Adam's work. Also follow him on Twitter at FX_Button. So Laura likes listening to us, she said.
Yeah.
And Adam, I just want to say thanks for joining us today.
Well, yeah, thanks for having me. A lot of central banks be coming up today, so that'll be a drag, but
okay. Everything cool at home with the tribe?
Yeah, the 4 kids. Yeah, they're running me ragged. So school's in though, Dale. School's back in.
Adam, great catching up with you, buddy. Really appreciate you stepping up.
Blake.
And all right, everyone. So that's a wrap. Follow Adam. Should be part of your intelligence gathering. And that'll be a wrap for today. Join the team in 14 minutes on the morning edge. And you need the edge when markets are on the ledge. So I'll see everyone tomorrow. Don't just count your pips, count your blessings. I have a real bear coming in tomorrow at 7 Sentinels. Don will be with us. Adios, everyone.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.